All right, let's get in the trenches here. It's earnings. So how do you trade it? So Scott, Alcoa kicked off earnings yesterday, reporting after the bell. Before we get to the actual action in the stock, let's get to how you take stocks into earnings and how you trade them after.
Well, it all depends on your time frame. And as far as Alcoa, it's down 30 cents. We're going to look to see if it absorbs it and goes positive. That would be a decent sign. But as far as earnings themselves, as a trader, I rarely ever take stocks into earnings.
Right.
There's too much risk, and it's just not worth it. I'll trade it after the earnings, the after hours, or sometimes the day after. There's a lot of opportunity, but if you take them into earnings as a trader, there's just sometimes too much risk.
And for a long-term investor, do you have to kind of wait for the action to shake out, like, say, IPOs, not 3 months or something, but do you need to wait a couple days to sort of get a good direction for the long term?
Well, it all depends on your thesis. If you're a long-term investor, just say in like Apple, you're not going to sell Apple into earnings. But if you have a great price and you have a lot of shares, maybe you sell some in-the-money calls, or maybe you go down a tier, and then if something happens where it's a bad quarter, you find levels to buy, certain moving averages. So into earnings as an investor, I think you have to have a plan. You can't hold it, but as a trader, we like to trade them after. We don't take them into earnings because there's a lot of opportunity and we get to play that volatility.
So then 2 questions for Alcoa. Let's start with the trading. Would you be trading this stock today? It was down yesterday, down in after hours, tried to rally but didn't make it. So basically, I mean, profit doubled, but it disappointed some analyst estimates, although the research director for the street said that, if you do a 34 EPS for Alcoa, that was way too high. It should have been in the low 30s. So it technically didn't actually miss. It was in line with what most analysts were expecting. And they did forecast that global aluminum demand was going to stay steady at around 12%. These are all positives.
So I think for psychology of the market today, it'll be important to watch. There's really not that much opportunity to trade Alcoa. It doesn't really move. But if it can go from negative to positive today, maybe the market will say, oh, they took the earnings in stride, it's positive, and that could help get us from negative to positive. If you look at Alcoa here, you'll see there wasn't really that big of expectations. Look where the old high was, a lower high. Technically, it's not doing so great, but into this 1550, I would look to see if maybe you want to be a long-term holder in Alcoa. You buy some if it goes positive. Maybe we start to see some buying come into the S&Ps and the Dow and that sector.
Now, 2 things that we did learn from Alcoa, which I want to sort of extrapolate and look to other metal stocks, are the CEO forecasted growth in China to be between 5% and 8%, obviously lower than 2010, but not terrible. We also saw that profit margins were slightly lower quarter on quarter, but year on year, still really positive. So I want to take a look at, say, a U.S. Steel reports in 2 weeks. I know you don't take it into earnings, but wondered if there was something to look at before.
Well, looking at it before is great because sometimes they move in anticipation of earnings and have nice profitable trades, but you just don't have to take them in. So today, if you look at U.S. Steel and look where it is.
And it's down more than like 29% since mid-February.
This has just been a laggard. Below the 200-day, it just doesn't look good at all, to be honest. I think, obviously this 41, 42 will be important to hold. It just was as high as 47. I guess if they take Alcoa positive, maybe this is worth a cash flow trade today or an entry for the long term. But right now, this looks technically weak to me.
It seems, though, that expectations are really weak for the stock, so I think it should be on everyone's radar because if it doesn't disappoint or if it comes in a little bit above estimates, that's going to be something to look at after their earnings report. All right, want to hit on 3 real quick. They are the iron ore markets, the beast of the iron ore, right? Rio Tinto, BHP, and Vale, really dependent on demand from China. So the stock's down collectively between 2-3% on Monday. Want to know also if there's some bargain hunting opportunities with these guys.
So which one do you want to look at first?
Let's go to Rio.
Rio, what is that?
RIO.
RIO, I knew that. Here we go. That just shows you how much I trade these things. This actually is looking a little bit better. Look how close to the highs are. Here's the recent highs, a lower high. It's still making lower highs, but it held up better. It was way above the 200-day. I think that this is decent. Into this area, it just came in from 74. If you're a dip buyer, you could look to buy this one right around here, right around this 68, 69.
Let's go to BHP.
BHP, let's see how this is holding up. BHP, not as strong as the last one. Did have a decent move, so it was in this rally with the rest of them. Coming back in, I think around 92. You could be a buyer of this thing. This one looks okay as well if you have to be in this group.
All right, and last up, let's go to Vale real quick, V-A-L-E. Interesting, though, we saw that new loans in China in June grew 3.3% year over year. So I just have to say, money is out there.
Yes.
It is.
And this one doesn't look as strong as the past ones. I would avoid this one for now.
All right, so Rio for the pick of those 3.
Yes.
All right.